All right there. Well, it's time to talk markets. And Effiong Ekop is in the studio, and Mr. Rotimi Fakayejo should be joining us via phone. Oh, well, the market is still down. Again, as for today, we have RT Briscoe, we have BNH, we have Lincoln Shaw, we have Regalinks, we have M Benefit. Losers for today, we have Total, we have Len Africa, we have Honeywell Flour, we have Cortex, and we have Nigerian Police Force, Microfinance Bank, and the losers list today. Yeah, let's get talking. Mr. Fakayejo, are you there?
Yeah.
What is your take with regards to the figures from the exchange, and what are fundamentals driving trade at this time?
Well, today the market closed flat, and I will say positive flat because yesterday the Asia index closed at 49,440 basis points, and today it closed 49,445 basis points. So it's positive but flat. At this time, there isn't much sentiment driving the market. And what I noticed is that today the value of trade is better. It's over 2 billion compared to yesterday, whereby it was less, and also on Friday when it was equally less. And I believe strongly that investors are comfortable with the state of the market, except that there is no new fund coming in. The liquidity is not there to actually drive up the prices. And at the same time, investors are quite cautious in their transactions. But nobody is actually, there is not some sort of panic prevailing in the market right now. So everything is calm, and the investors are still very much positive. So the fundamentals still stand right. The results we saw for Q2, virtually all of them were really good, especially the blue chip stocks. And that also is very much what is actually giving hope and better returns in the future for investors. Expectation of better returns.
Mr. Fakayejo, thank you so much, and do enjoy the rest of your day.
You're welcome.
Effiong, I know you want to take it up from where Mr. Fakayejo just. Yes. Are you optimistic? What are your thoughts? What's running through your mind at the moment?
Well, I think that the sentiments in the market is largely being cautious. That's the way it is. And if you stay cautious, you are not likely to burn your fingers. As he said, we do not have any kind of attraction, in any parts of the market that is to drive heavy funds into any sector. We've seen greater improvements today in the volume that we traded. Yesterday was just about 65 million units of shares. Today, 117 million, and value above 2 billion. So there is a slight improvement, but still very, very low. And expectation is that we will still be seeing lower figures in the weeks ahead, even as we want to launch, full campaigns, So from now till end of the year, I think that market will just be up and down, keeping its characteristics. But then the important thing is that as we see the market this way, performing on the average level, those who have the mind to accumulate wealth for future, it is a very good opportunity because these securities are coming with very cheap prices. And so many of them, if they have the money, they can accumulate. But all of this talking about high time, huge volume as we used to do, is not going to come for a very long time because investors generally want to reduce risk that they take in the market for obvious reasons, because you do not know when economic situation will really improve.
Of course.
Yes. When will the inflation rates begin to come down? When will the exchange rates, the two that we have, begin to narrow down, and many other things. So these are the things shaping and frightening investors.
Indeed. It's scary, but we have to just leave it that way, and we keep a tab on, giving our viewers information regards trading across the market.
We do our job and believing that tomorrow will be better.
Thank you so much, Effiong Ekop, as usual.
Thank you, Terry.
All right, there. Well, let's move. Asian shares edged up in the early trade today following a rebound in the final hour of New York trading as investors turned their attention to an expected hefty Federal Reserve's interest rate hikes this week to tackle inflation. MSCI's broadest index of Asian Pacific shares outside Japan was up 0.7%, while U.S. stock features, the S&P 500 E-minus rose 0.1%, the pound's nickel advanced 0.38%, and Australian shares climbed 1.1%. Chinese blue chips CSI index was 0.54% higher in early trade, while Hong Kong Hang Seng index opened up 0.92%. The S&P 500 and Nasdaq Composite rebounded after logging their worst weekly percentage drop since June, as markets were fully priced for a rise in interest rates for at least 75 basis points as at the end of Fed's September 2020 to 21st policy meeting. The Swiss government has announced a significant cut in its economic growth forecast, citing growing risk from the tense energy situation and sharp price increases. According to the country's Secretariat for Economic Affairs, in 2023, the economy is expected to expand by 1.1%, down from the previous expectations of 1.9% increase. Switzerland, which is the least dependent on Russian gas, has seen significantly lower inflation than the neighboring Eurozone, with its forecasts are based on the assumption that there will be no shortages if there is a reduction in gas or electricity. Earlier this month, three of Germany's leading economic institutes lowered their forecast for Europe's largest economy next year, predicting higher energy prices caused by Ukraine war, which will take their toll. PepsiCo Incorporated said it has stopped the production of Pepsi, 7-Up, and Mountain Dew in Russia, nearly 6 months after the U.S. company said it would suspend sales and production after Moscow's sales and production after sent tens of thousands of troops into Ukraine. Pepsi's announcement came after dozens of supermarkets, retailers, and gyms in Moscow and beyond found cans and bottles of Pepsi printed with July and August production dates from factories within Russia. The company also noted that the continued availability of the product highlights the complexity of withdrawing from one of the world's largest countries. Meanwhile, Atlanta-based rival Coca-Cola production in Russia also continued after it said in March it will suspend operations. Oil prices on the international market ticked up today as OPEC and its allies keep producing less than their quotas, but we're headed for a fourth monthly decline ahead of an expected further U.S. interest rate hike, which may curb economic growth and fuel demand. U.S. West Texas Intermediate crude remains in the red zone, recording a price decline of 0.35%, selling at $85.43 per barrel. Brent crude sells at $92.06 per barrel, with an upward price margin of 0.07%. Bonnie Light offers $93.40 per barrel, with an uptick of 1.14% for the OPEC basket. Crude oil dealer slate selling $95.70 per barrel, with a downward price margin of 1.64%. That's Business Nigeria for today. Thank you so much for being a part of it. I'll see you tomorrow, same time. Stay with TVC News for the rest of our programming.